Hello and welcome to episode 45 of the Wealth Amplifier podcast. Our nation's podcast nightmare is over. After 6 weeks or so off, we are back. Welcome, gentlemen.
Good to be back. And as part of our new initiatives to try and be more modern and friendly with our social media and content, if you're enjoying this content, please give us a follow. Please check us out on YouTube specifically, where we're trying to do a whole lot more. If you're a client, if you're interested in our firm, we have lots of fun stuff that goes on YouTube, short clips, educational clips, long stuff. Give us a like, give us a subscribe. I feel like a influencer saying that, but
I was gonna say, like when my kids are watching YouTube, I was here, smash the like button, smash, yeah. So,
and well, speaking of initiatives, there is a reason why we haven't done a podcast in 6 weeks, and that is because in 2026, we are making a concerted effort to get out of the office more. After 5 years of post-COVID life and Zoom culture and all that, we want to get out of here and see people. That's clients around the country, partners, prospective clients, and so on. And to that end, Aaron, why don't you lead us off? You had a big trip recently.
I did, and the reason we didn't do this last week is because I was sunburned. So you're going to get.
Now I have that because
it wasn't as bad as mine. So I was out in LA, seeing a bunch of current clients in perspective. Not all, but mostly surrounding the SpaceX universe. So as I maybe mentioned in the past, and we've done some posts about, we've got a fair amount of clients that have worked for SpaceX, that do work for SpaceX. And California is a long way away. So there's people that we've worked with for a long time that we've never got to meet in person. So I figured it was a good time to get out there. So other than the sunburn, it was a great trip. Commuting, I'd imagine. I sat next to a guy on the plane, 150 nights a year in a hotel, things like that. And that is tough. But I will say, a 5-hour flight, it's not the worst thing in the world. It's not comfortable. But once you're there, you flew across the country, you're able to accomplish a lot of things. So it was not a terrible trip getting out there. And then just seeing what is going on in and around the aerospace and defense and technology area is pretty impressive. It is a young crowd of employees and founders, whether it's a startup company from somebody who left SpaceX or somebody that's been at SpaceX their entire career, which might be, only 6, 8, 10, 12 years. There's a lot of money there. SpaceX stock keeps just doubling and doubling and doubling. And there's a lot of questions that people have. But it's just an exciting time to be in and around it. And forgetting the financial aspect, I think people are excited about all the prospects for innovation, not just in space, but one of the companies that we went and visited. Okay, they're doing things in space, but what it's for pharmaceutical testing. They figured out they could do pharmaceutical testing in space because without gravity, you could test in a better, more efficient manner. I'm not sure of all the reasons why, but great. If that's going to help the world because now we have better medicines, all for it. So exciting in general.
Yeah, wild. I was catching up with Allie, who you obviously went out on the trip with, and she was mentioning some of the same stuff a couple hours ago. And this thought occurred to me, for those who are into sports, they'll sort of appreciate this analogy, but especially like in football, you always hear about like coaching trees, right? Like the Bill Belichick coaching tree or Bill Parcells coaching tree. And you have these like legends who were part of the assistant coaching staff after a Super Bowl, and they go on to make their own legacy. The Elon Musk company, like former employees who have gone on to found their own tech unicorns, has to be an enormous and impressive grouping of companies. That'd be an interesting investment theme to just invest in former Elon Musk employees who start companies. Not sure if anybody's got that fund out there, but I was just thinking about that. Like,
where there's an idea, there's an ETF. I'm sure somebody.
That's right. That's right.
So very good trip. Good to see everyone out there. We had an hour to kill in between meetings. One of the clients we were with, we had lunch, and he's like, "Hey, do you want to just walk down by the beach?" So I'm when I'm in the sun, I got a hat on all the time, sunglasses. So I was not prepared. So we walked for an hour. I got back that night. I was like, man, just the right side of my face, because we were walking in one direction, is really feeling it. And being here in the cold, dark Northeast for 4 or 6 months and not seeing the sun for a while really took it out of me.
Yeah. Speaking of that, as you guys can tell, anybody who's watching, I'm wearing, this is the first day I've worn a polo in 2026. It's a very summery polo, and its contrast to my skin color right now is noticeable for me. I'm like, oh man, like this is a summer polo and I don't look very summery in terms of my skin tone at the moment. So yeah.
70 degrees today. We should be doing this outside. We did have an idea to do the podcast, on location. I was going to be out in LA, and Matt was just in Florida. We should have done it that way, but maybe next time.
Yeah, look, I don't think we could have done it with you in LA because when you have 15 meetings in about a day and a half, I don't think you had time.
It was a quick turnaround. Other than that 1 hour sunburn hour, did not have much time, but it was well worth it. Left on a Sunday night, got back, I don't know, Wednesday at 6 a.m. and right back to the office we went. So we were busy.
Well, with all the work but really, you're leading the charge in the space industry, all the work that we're doing, is there a trip to Texas in your future?
Texas, Brownsville or Starbase is what they call it. I pulled it up on a map where it is. I don't think you can't get there. It's impossible. It is on the border of Mexico, in the water. And I said to somebody, because they go down quite frequently, I said, how do you get there? They said, SpaceX flies a charter. They take us down there. So I don't know if I'm going anytime soon, unless Elon wants to let me hop on his plane. One of the people we were with did tell us this. I said, tell me some stories. Like, how was it working with Elon? And do you have interaction? And he said he was on a plane with him back and forth a couple times. And he is just all go all the time. He said he was messing with reporters, texting them, hey, we're going to do this. And they're like, are you really going to do that? And he goes, no, I'm not going to do that, over the text. And then he whispers to everybody else, I am doing that. Like he's just completely, it's his world and universe. We're just living in it kind of guy. So some cool stories that we got to hear.
Yeah.
It's interesting because he's been a, obviously controversial figure for a long time, particularly the last couple of years when he threw his hat into the political ring. But listening to the podcast circuit, and it's a biased audience, but the people that have actually worked with him, a lot of them love the guy. Or at least maybe they don't personally love him, but they're very loyal to him because I guess, he's made a lot of people rich. And maybe, and maybe beyond that, they just like working with him. But he gets a seemingly more favorable feedback from people that know him than from those that witness what he does in public, which admittedly is a little questionable sometimes.
Fair. Just to give us a plug, give you a plug, Aaron, for all the good work you've been doing there. Since you're too humble to say it yourself. And as a plug to maybe either prospective clients who listen to us that are either maybe with SpaceX or they've got wealth tied up for a private company they've worked for. Like, what was it that sort of gave us this opportunity? I mean, it's not just one thing, but how did we get to the place where Amplius as a firm is sort of a prospective landing place for a lot of these
folks? So today's podcast, not to kick you guys aside, but it was supposed to be with someone named Brian. He unfortunately we had to cancel this morning. Brian is the first person SpaceX related that we worked with. I was going to do a podcast with him. We had to delay, but it just started with a natural, like it is any other time. Work with a client, and they say, "Hey, can you talk to my sister, my friend, my brother, my colleague?" And it turned into working with Brian, and then he referred, and we keep building that network. And now that there are, I don't even call them. It's certainly rumors of an IPO for SpaceX, but it's becoming a little more real now. Nothing official, but rumors of an IPO. SpaceX has always had liquidity where if you own the stock, you could sell it back to the company at specific intervals. But now when it's becoming real and there's a potential, it is fully liquid, it is a giant tax bill, I have this mega concentration in one stock that I now can just click a button and sell. Well, what other ways are there to mitigate the downside risk? Can I not sell, therefore no tax bill, but put an option strategy around the stock, meaning putting guardrails, putting bumpers so you don't go into the gutter on the up or downside, or tax deferral strategies, tax reduction strategies, charitable giving strategies. So we put a playbook together with about 8 or 10 different strategies that we've sent around to some friends and colleagues, and it's got a ton of traction. People reaching out to us to say like, hey man, I've never heard of this one strategy. Can we talk about it? So I appreciate you asking, Pat. It's been a good, fun couple of weeks, and hope a lot more fun to come. As long as they do IPO and the stock does well, should be good for everybody.
Well said. Yeah.
Amplius Manhattan Beach coming your way.
That wouldn't suck. But yeah, I think that playbook that you just mentioned too, not to pat ourselves too much on the back, but that came together very organically, and it's because we do these things every day for a lot of these folks, where we've put together a pretty intentional service model for a lot of these clients together over the years that has decision trees and services that meet them around how to best tax optimize this equity compensation, how to take advantage of it, how to be smart about it, how to plan for it. So yeah, I'll shut up and get off my soapbox there, but I just think it's worth writing home that we've got some traction here as a firm as a result of clients who have worked with us recognizing some of the capabilities we have.
I appreciate that. And I will say the fact that it's SpaceX, not that it's irrelevant, but whether it's SpaceX or you own a stock that you bought 30 years ago and it's just a massive position now, or you work at a company, whatever that concentrated position is, it's the same, in quote, problem. It's a concentrated position. It's a lot of your net worth. There's generally a big tax gain. What do I do? Mm-hmm. So ignore the position itself. It's the same issue topic.
Yeah,
which certainly we're built to help serve.
Yeah, well said.
Want to go on to Matt's trip?
Yeah, Matt, tell us all about Miami Futureproof parties.
Tell us about your sunburn.
Yes. So I arrived at my house about 13 hours ago at 1 a.m. So I'm still a little tired, but I had a similar length trip to you. I went to Miami on Sunday afternoon and flew home last night. We're recording this on Wednesday, so flew home on Tuesday night. And I attended the Futureproof Citywide conference, literally on the beach in Miami. Ran maybe from like on Ocean Drive there, maybe from like 10th to 13th. They basically had 4 blocks, maybe more. Tented off on the beach. And what Futureproof is, just by background for any of our listeners or viewers who are not familiar, this started about 5 years ago in Huntington Beach, California, and they now do one on each coast each year, one in California, one in Miami. Pat, you went out to the California one. You and I both went out a couple years ago, and then you went again this past year in 2025. And I did the Miami one this week. But essentially what these guys did was turn the conference on its head, the whole concept of it. Essentially, gone are the boardrooms and the suits and the lack of windows and not knowing what city you're in or what time of day it is, which is what a lot of conferences can be like. And essentially, both in California and Miami, these are gatherings on the beach, outside. Everybody's more or less in like shorts and t-shirts, and it's people from all over the industry. So it's wealth management, a lot of technology. This particular conference was focused on AI, which we'll talk about. So a lot of fintech, a lot of asset managers, various tax and planning strategies, similar to what Aaron and Pat were just alluding to. And how it works is it's sort of part trade show where you're walking around from booth to booth and just sort of learning what all these companies do. Then they have a couple main stages with actual presenters, some really big wigs in the industry. In fact, CNBC was down there yesterday and interviewing people from the conference. And then they also had what they call these breakthrough meetings, which are basically like 15-minute speed dating rounds where you talk to somebody, you find out what they do, they find out what you do. If there's an opportunity to talk more about business going forward, great. And if there's not, you each go your separate way and move on with life. And you put all that together and you start to see familiar faces on the circuit. So there's a bit of a networking thing, but it's a lot of fun. And then mixed with that, it's Miami. So we have a number of clients down there. So got to see a couple of our clients that I don't get to see in person as often as we would like, which is always fun. And it's also Miami. So I had a couple good meals as well.
Very nice.
So what was the big, a lot was around AI in this conference?
Yeah, the theme of the conference this time around was AI and its role in our industry. And, you know, I had to take some of it with a grain of salt because there are 4,000 people at this. There were 4,000 people at this conference. If AI starts just replacing everybody in our industry, those are going to be 4,000 cranky people. So a lot of the spin, and I would say I tend to buy it, but it is one perspective, was that this industry would be greatly enhanced by AI, but not disrupted to the degree that other industries are because of the human connection that goes into our industry. So a lot of it, Anthropic was on the big stage there. They have a whole wealth management division where what they're really trying to do is enhance the experience for both clients and advisors so we can be a whole lot more efficient, do a lot more for our clients. And so a lot of it was around tech interaction. Like, so we started out in the AI wealth management space with the more simple standard, like note takers. And those of you that have been on Zooms with us likely see we have our AI note taker on there, helps with our efficiency and so on. But it's going way beyond that now. A lot of places have these effectively agents, like a little AI Pat that can answer questions for you and meet with you. We're not at that point yet. And there were just any number of areas along planning, a lot of ways where clients, we'd already do some stuff like this, but it's getting better, where clients can take tax returns, estate documents, give them to us. We can put them into these various portals. You get summaries of documents, suggestions, all of these things to really enhance the planning experience. Which, Pat, I know you run for us, so I know your eyes and ears are always open for new ideas. But I think we found a couple cool companies down there that we can possibly vet a little bit further.
And all at the end of the day, the answer is like what I'm hearing is allow the advisors to do what they're really good at, is talk to clients, be in touch with them, have the important conversations, because you have so much of the manual processes are being automated. So you don't have to sit behind your computer and type notes and look things up. So you free up that time, more time to spend with clients and address their topics of concern and desires and goals, and have better tools to meet those outcomes, the tax strategy, the estate planning, the portfolio management, all those sort of things. It's pretty cool.
It is. Like, just as an example, I was talking to somebody we both know there. I'll leave his name off the podcast, who works at a firm that we know well. And he is a client of another firm we know well. So this is not like our client, but he was showing me his interface with that firm. And essentially, he's just on there all the time, getting essentially his AI advisor summarizing what they're doing for him and so on. And he's like, yeah, I talk to the humans, but like, this cuts all of the like unnecessary work out of the way so that when I want to have a conversation, we're talking about more substantial stuff. And I think that's part of the idea behind it. I heard some quote, and I don't know who said it, so I don't know who to attribute to, but that AI is not going to replace the financial advisory business, but it is going to replace the advisors that don't know how to leverage AI. And that is probably the same for a lot of industries, but that was one of the takeaways of the conference.
Well said. Whoever said that quote.
Yeah,
it's your quote now.
Yeah, right. All mine. It was good. And it just there are some financial celebrities in the crowd, which probably only matter to people like me and their families, but had some book signings. I was talking to one of the longtime CNBC anchors yesterday, and he's like, Matt, I have 2 copies of my book left. Do you want it? I was like, sure. So I was lugging this book around the rest of the time, autographed. But he's a very nice guy, and it was funny that he did that.
Nice. Cool. Who was it?
Oh, Bob Pisani.
Nice. Yeah, we can name drop a little bit. That's cool.
All right, fine. Bob, I didn't know Bob Pisani would be a name drop. That to me, he moves the needle, and probably to Bob's family. I don't know about to everybody else, but he's a good guy. So.
Couple name recognitions there.
Yeah.
Well, I'll say too, like just hearing some of your takeaways from the conference, what does seem anecdotally true, and this is maybe not a novel observation, but I was at the last Futureproof conference in Huntington Beach, which was about 7 months ago. A lot of these themes were being discussed, but not to the point where they have that you just sort of discussed them and some of the newer tools and new theories and hypotheses around how they're going to take hold in our industry. So that is a little jarring. I think that sort of is epitomizing some of the fear I think we're seeing in markets and within the economy right now of what AI is doing. It's like, it's been 6 months. I had like a whole set of narratives from my conference 6 months ago, and now there's like a whole new set of narratives around AI. So it's just that's what's jarring, I think, is how fast this is all moving.
Well, and to your point on that, they had this like they had all kinds of names like FinTech Alley, like, AI Expo, but I was in this little area with the like, I think the newest companies that have small booths, and I was just walking around talking to them, finding out what they were doing. And one of them had like a pretty cool product. So I was asking him, showing me the demo. I was like, so how long you guys been doing this? How long you been around? He's like, yeah, we've been around. Like we launched this in August. And I was like, oh, okay. So like, and I think there are some lessons in that. Like, we can't go like all in on like this one company because they may be gone in a week and there might be a new, better one coming. So there is some nuance to this process. But
I don't think anybody's going to remember this. Any current clients that we work with that I started with way back when I first started. But I was told once, when I started in my mid-20s, people say, how long you been in the business? I got the recommendation to say, oh, it feels like forever, and then you just move on. Meanwhile, I was there for 6 months. How long you been doing this? Feels like forever. What about you? How long you been in the business?
That's funny. That reminds me, I don't know why, the Superbad scene where McLovin is showing his, they asked for his ID, his fake ID. And he's like, oh, it makes me feel young again.
That's funny.
Yeah, I heard they recently added more hops to it. That whole like scene is hilarious.
That scene was, I was flicking the channels recently, that movie was on, and the scene when he first reveals his ID with the name McLovin, it's just great. Like,
yeah,
all the names in the world, you chose McLovin?
Yeah. That is I almost did Muhammad. We could go through that whole scene. That is such a good movie. Just pure classic.
So pivoting to less exciting topics. Well, I mean, there's a
be careful. Watch that.
Yes. Well, it's
he's in trouble now.
So there are a couple things moving headlines right now in the markets. One are these private credit sort of seemingly daily, I don't want to say blow-ups, but like fear spikes. And then, of course, we have the Operation War, whatever it's supposed to be called, the U.S. and Israel taking action against Iran and the retaliation around the region and so on, which has been causing the markets to gyrate a bit. Any thoughts? Well, first of all, we haven't been together in a while. Taking your temperature, are you getting nervous and panic contacts from clients? What do you think the mood is out there?
Go ahead, Aaron.
I was going to say, broadly speaking, no. If you call somebody and talk to them, the topic comes up. But are we getting calls and emails, panic, get me out of the market? What do we do? Like there have been other times? No. And look, each of us are different and we all work with different people. But I'd imagine you guys are generally the same. But no, I've not gotten that fear and panic. And look, the S&P, the stock market's flat this year. It's down 1%. It's up I don't know. It's flat essentially. So it's not like it's down 10 and 15%. At that moment, yes, I think we'd be getting a lot more calls. But at least for now, not much.
Yeah, I think some of that I'd chalk up to, I agree with that completely, Aaron. I think it's like we generally, the clients we serve, we're lucky. I think they delegate to us. Like they have us as their professionals to make risk management decisions in their portfolio and all that kind of stuff. So they're maybe not paying attention to some of the headlines quite as much. I also think credit to us. I've done a lot of, patting our own backs this episode, but like we didn't go headlong into the private credit asset class so much over the last 5 years within client portfolios, while everyone was sort of clamoring for capital raising there. We had some exposure, sure, but not, I think, to the extent of maybe like the average sophisticated RIA, if you will. So maybe that's been helpful for us. But I think, glad you brought up the whole topic, Matt, because it hits on, private credit's an interesting pocket for a variety of reasons. It also, I think, is shining a light on some of these other themes that we're seeing in markets which are related to AI, which we were just talking about. The one that has been sort of well documented, but if you're not paying attention to it day to day, is in public markets and private markets too, but we see the valuations change in public markets. Incumbent software companies have been crushed recently, and the theme there is like, every time Anthropic tweets something with a new product, they're like dismantling some $500 billion software company because they're going to eat their lunch using their sort of AI capabilities. Now, there's some, I think, fear there. There's some sort of like valuation disconnections that I don't know if they're correct or if they will bear fruit in the future. But taking it back to private credit, where I think the three of us have had caution on private credit over the last 5 years, is the whole asset class is a little opaque. Like, it's hard to know like what companies are in the portfolio of a private credit fund. It's hard to know what sectors are representative. It's hard to know exactly how great these companies are. It's just a little opaque compared to like your average ETF in the market. And we're finding out, I think, on average, it's like 20 to 30% a lot of these funds have exposure to software unicorns or software companies, which may not look so great with their subscription model services the way they have the last 10 years. So again, there's a lot in there, but that I think is causing a lot of panic within the asset class itself, which is causing panic on the equity side of a lot of these software companies too, which is all related to the sort of AI disruption of things. So it's all these themes kind of coming together in a few different asset classes.
You're right. And you mentioned the pockets of weakness. You've almost seen, let's put the military operation to the side for a minute, because that's a whole separate topic and a newer one, the last couple of weeks. But what we've seen really for the last several months is almost this like rotating AI disruption fear trade, where they pick an industry. Software has been probably the biggest one to get hit, but there was a day where wealth management got hit. There was a day where insurance was getting hit, and so on. But to Aaron's point, the broad markets have essentially done nothing for the last 3 months or so. Yet it does feel like, and I actually think this is a constructive or positive backdrop, it does feel like people are more negative than the reality of what's been going on in the markets. Like, when they used to have in New York, like the taxi driver. When your taxi driver is telling you to buy stocks, you want to sell, like that all that. I feel like the proverbial taxi driver, Uber driver, and I'm not picking on one industry, seems anecdotally to be very negative right now, almost as if everybody's invested all in private equity, alternative asset managers, and crypto and software, because those are the areas that are getting hit. But the broader market, it's after 3 great years, goes sideways for a couple months. It feels like a big nothing so far.
Yeah, I agree with you. And I think there's just sort of I had seen, this was probably a month and a half ago at this point, so it's basically obsolete in our nowadays news era. But sort of, you saw like the Mag 7, some of these hyperscalers that we keep talking about, they've lost some valuation as well from some of their all-time highs, because there's some fear around, look at how much money these companies are spending, right? I forget the number, but it's some ridiculous, like trillions of dollars between the Mag 7. They're spending money on AI infrastructure, AI investment. And the idea from investors, like, well, if they screw that up, they get that wrong, then the profits that we're all valuing are going to be worth a lot less because they spent so much money on it. They're going to have to write things down, et cetera. So those companies move a little lower. But then simultaneously, you have these displacement fear trades that you just mentioned, Matt. And it's like, well, both things can't necessarily be true. If AI is going to be great and displace all these companies, then the AI investment of the Mag 7 hyperscalers must be right. And so how can both things be true at once? And it's sort of like, there's just, to me, it is highlighting what we talk about all the time on this podcast, is like investor behavior. And I think perception as opposed to actual data. Both things are important when valuing companies and public markets are trading. But I think we're seeing more of that behavioral element take hold in markets right now.
No, I think that's true. But picking up on the behavioral piece, because this is something I've been wondering. If you look at what went on around the military operation, just in the markets, we're not going to get into the politics of it, just sort of the market response. Basically, the markets were moving with the price of oil. As oil shot up, stocks went down, interest rates went up, and so on. And then all of a sudden, when a positive comment would come out, oil goes back down, the markets recover. But even when you look at it, the front contract went way up of the barrel of oil, but out 3-6 months, not much of a move. And it was almost like the market was saying, we think this is going to be a relatively short-term disruption. The stock market, I think, at its trough was maybe off 6% from its high before the recovery, nothing that big. So I guess my question to you behaviorally, has the market gotten rational? Like, is that, have investors become rational, or they just haven't been sort of, for lack of another term, metaphorically, like kicked in the stomach enough yet?
I don't think the kick in the stomach has been felt or happened.
You don't think it's been happening?
I don't think it has. Yeah. I think we'll know if we have to ask the question, it hasn't happened. I think when I feel the need to call every single client over a 2-day period to make sure everyone's okay and not jumping off a cliff, we haven't had that in a long time.
Yeah.
April of last year.
Yeah.
That was a time.
Yeah. You're right. I mean, the indexes, on averages have held up. It's just these pockets that have been headline grabbers for a variety of reasons the last few months.
Yeah. Anything else market related we should cover, or should we pivot to our closing routine here?
I'll just say it's a good time to stay diversified. Hire someone who can keep you from panicking.
You have anybody in mind?
I know a good firm out in Bluebell, Pennsylvania.
And Manhattan Beach.
They go down to Miami. They're cool firm.
Yeah.
I've done enough plugging of us on this episode. But.
How about we throw in a little dated Hoagie review if you're up for it?
Please fire away.
So this was pre-Super Bowl, so it's been a while. The week before the Super Bowl, figure out, hey, we're going to some friend's house. We got to figure out what we're doing. I got to scout it out. And I told somebody, hey, I'll pick up hoagies. They said, oh, well, you're the hoagie guy. Like, where are you going to do? So now I feel the pressure. Start Googling around, looking at some of my notes. So we settled on Maranucci's. And I actually was a little skeptical because when I hear about a place that has multiple locations, like sometimes I feel like you lose your luster a little bit. But I went with it. So you got Mayfair, Port Richmond, and Woodhaven, all in the Philadelphia area. So I did the Woodhaven, which I think is maybe the most recent one. I didn't know whether it was going to be the best, the worst, or all the same. Or
those three areas aren't even that far away from each other. Like
they're not. Maybe that means they're that amazing that they had to put three in the same general area.
Right.
Woodhaven is definitely not the first one. It might have been Mayfair, but I think the Mayfair one, like on a right on the corner of a block, and people are in and out all day. It's like a factory. But anyway. Got the order from our friends, put the order in ahead of time. This is our scouting round before the Super Bowl. We got the sandwiches, really good. They're not your standard boring turkey or Italian. They put a little flavor and love into it. They've got their own seasonings. They've got, instead of getting a straight Italian, they have one called the Nucci. The Nucci is your sharp provolone, the roasted peppers, and a lot of places have it, but theirs is different enough and unique that it's one you come back for. So in how do you judge a hoagie place? I told you it's like, do you smell when you get out of there like a hoagie? They definitely had that. The smell factor was there, but I dropped the sandwiches off at our friend's house. I feel like I've told this story already, and I hope we didn't do this on a podcast already. I must have just told it to some other people. But dropped it off at our friend's house, and they have kids, two boys that are my son's age, and they just responded. And he texted me. He said, "That is a damn good hoagie." That's what one of their kids said. So okay, that's a 9.4 hoagie right there. And sometimes I hesitate to say like higher than those grades because how can you possibly be a 10 like that? I don't know what you could do to get to that level, but they had their own hot pepper relish. They had all the pickles on the side you want to put on. It was a really good spot. So definitely, so we did it then, and we do it again for the Super Bowl the following week, which got good reviews as well.
Where's your ranking on it?
Like so the score?
Yeah, score
9.4 I think is the number.
Oh wow,
9.4. It's one we'll be going back to plenty. It's a half an hour away, so it's not next door, but.
Worth the drive.
Worth the drive, yeah, for sure.
Nice.
And I have a hoagie contribution to the hoagie section.
Nice.
I just remembered that you're saying that. So my cousin Jim and Joyce were on vacation with their friends in Israel when the war broke out. So, like many Americans, they were stranded there for a while, and it had a very interesting experience. They're all fine. They were interviewed live on NBC on national TV, like when they did a feature of people that were stranded there. But anyway, so they're a Chicago family. Eventually, I think by car to Jordan, plane to Greece, plane to London, and then plane to the U.S. They eventually made it home, and a day or two later arrived at their door, courtesy of their family out east, was a gold belly delivery from the White House.
That's a good one.
So because Jim, who's a bit older than I am, and his dad, who's no longer with us, but they were always big fans of the White House when they came in and would drive from Philly to Atlantic City. I figured they weren't getting anything quite like that in Tel Aviv, so he texted me yesterday when it arrived, and we sent him an order of 8. Hopefully, he didn't eat the whole thing last night.
Hoagies heal all. Yeah, that's a great one. Haven't done the formal review yet. We'll have to make sure we get back there this summer when going down the shore.
Yes. So anything as we close, you're reading, watching, listening to, any recommendations?
Nothing crazy. I'm rewatching. I've seen it before, but I'm rewatching Peaky Blinders from start to finish because the finale movie called The Immortal Man is coming out on March 20th, and I'm a big fan, so I'm like getting all caught up on the seasons previous.
Is the movie like a prequel, a sequel, or is it just?
It's just the ending of like the
so it's just the finale.
It's the finale. Instead of doing a final season, they just did a movie, commissioned a movie. So interesting, different than how a lot of shows finish. So I'm sort of anxious I'm hoping they don't screw it up, obviously.
Right.
So yeah, that's what I'm watching.
I was going to pull up. Go ahead.
Was there a hockey game since we last spoke?
Oh, wow. Yeah. Well, it's been too long.
Yes.
Yeah. Do you want me to riff on that, or what do you guys want to talk about that one?
Well, I mean, I think the floor is yours. It's a big moment for you.
Yeah. And I've thought about doing some content on this myself, just to talk about it. Yeah. So, I mean, look, I was, as a huge fan of ice hockey, USA hockey, Jack Hughes is a New Jersey Devils fan who scored the golden goal. Yes, that Sunday morning, 8:00 on the East Coast, watching that game was nerve-wracking, and then it was pure elation. And I think the significance of both the women's team and the men's team winning gold, again, as someone who's super passionate about hockey, is it's hard to even underplay how important I think that win is on the national stage. It's 46 years since the men won a gold medal, and even as competitive as the men have been for the last 20, 30 years, even on the world stage, they just haven't been able to slay the beast that has been Canada in all these big games. And they did it finally. And so dramatic fashion, great tournament. I'm still, as I think the hockey world is still kind of buzzing from that whole victory. It's been really cool to just sort of see the aftermath of it all.
It was awesome.
Exciting.
Yeah. And as a hockey novice, the goalie play in the gold medal game was just absurd.
Unbelievable.
That one save, I still don't understand how that happened. Like the physics of that just seem impossible.
I know.
What's the goalie's name?
Connor Hellebuck.
I saw a podcast with him afterwards. He said that he was talking about on the stick, you can see where the puck hit on his stick.
That's cool.
And he went upstairs to his room and got it, and he held it on the screen. He was like, "Look, it was right here. You can tell." That's a souvenir.
Yeah, I'd imagine the Hockey Hall of Fame probably wants that if they haven't already requested it.
Something happened with the puck though. It went to Canada.
That's right.
And because that's where the Hockey Hall of Fame
Hockey Hall of
is
Fame in Toronto.
And they were saying that how dare the puck go to Canada from the winning goal.
Right. Yeah. Well, yeah.
I don't know if that's where the Hall of Fame is, but it's not a Hockey Hall of Fame item. This is a U.S. hockey item.
Yeah, agreed.
Not that we have a place to put it, but
right. Yeah.
And I know Canada's won plenty, but that's got to be just a brutal game to lose. I mean, they were pretty dominant for a lot of that game.
They were. I think Nathan McKinnon, one of their best players, said it. And it sort of got taken out of context, but in the interview after the game, he was like, you tell me who the better team was. I think you can judge that statement a few different ways. But yeah, Canada dominated for parts of that game. And if it weren't for, I think, Hellebuck, it's funny, without diving down the rabbit hole too much, coming into the tournament, like hockey pundits looked at both rosters, and it was sort of like Canada's got the edge in their forward group, their scoring prowess. U.S. has the edge in their goaltending and their defense. And the way things shook out, like, credit to the hockey gods, right? Like, that is exactly what we saw come to fruition. Like, it came down to the behemoths, the top two teams, and it was a battle of the star power on Canada versus the defensive stalwart aspect of the U.S. team, and the latter won out on this one. So it was just a great sort of hockey game for those that are nerds of the game like me.
All right. Well, you got anything, Aaron, or should we end it?
I was going to pull up my Netflix app to see what I've been watching. So to that point, if I can't even remember, it's been nothing that good. So World Baseball Classic I've been getting into, but not as exciting as Olympic hockey just yet. But hopefully the United States makes it over to the knockout round here, or whatever they call it. And they need to get lucky today with Italy and Mexico playing each other.
I haven't watched much, but that was a brutal look for the manager last night. Not like thinking effectively that the U.S. had qualified for the knockout, and they certainly had not. And then Italy beat them. Hopefully he gets bailed out today. But
yeah. Fingers crossed for that. But that's been fun to watch. It's been fun to watch on the back of the Olympics. I think, to your point, Aaron, it's like you're keeping this, like, national pride. Stuff.
Yeah, you got to keep it going. Yeah,
got the World Cup coming up. So
yeah, good year for it.
All right. Well, that's a wrap. Episode 45 in the books. We'll see you next time.
All right. See you guys.